Hi and welcome to Secret Crypto Tips YouTube channel. This is the first video of this channel in category of macroeconomics, the most important thing that you should know before investing in any financial market, and also the most underrated topic that you have seen in other crypto channels. It gets more important if you know that banks and financial institutions always take this into their considerations. I will speak about what you need to know as simple as possible, and believe me, by watching videos in this category, especially this one, you will go on a new whole level at investing. May these topics be hard to learn and need extra effort and patience, or maybe needs watching this video twice or even more, but it's worth every second of time you spend watching. This chart shows Bitcoin price with candles from 2018 to 2022. In second row, we have a yellow line that indicates United States inflation rates, and in third row, we have interest rates that US Fed has determined in white color. Before I start, we have three important phrases that you should be familiar to understand the next explanations. Number 1. Inflation rates is a measure of the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. CPI is the index for United States of inflationary rates. Number 2. Interest rates. Federal funds rate refers to target interest rates set by the Federal Open Market Committee, or FOMC. This target is the rate at which commercial banks borrow and lend their excess reserves to each other overnight. The FOMC, which is the policy-making body of the Federal Reserve, meets 8 times a year to set the target federal funds rate, which is part of its monetary policy. This is used to help promote economic growth. And number 3. Fed. The Federal Reserve is the central banking system of the United States of America. They monitors financial system risks and engages at home and abroad to help ensure the system supports a healthy economy for US two co-equal goals for monetary policy. First, maximum employment, and second, stable prices, meaning low and stable inflations. And to put it simply, Fed have 3 monetary tools to do their job: tightening, easing, and no changing. Tightening policy occurs when central banks raise the federal fund rate. Tight monetary policy is an action undertaken by a central bank such as the Federal Reserve to slow down overheated economic growth. Central banks engage in tight monetary policy when an economy is accelerating too quickly or inflation overall prices is rising too fast. Easing occurs when central banks lower the federal fund rate. An easing monetary policy environment serves the opposite purpose. In an easing policy environment, the central bank lowers rates to stimulate growth in the economy. Lower interest rates lead consumers to borrow more, also effectively increasing the money supply. And no changing at all. Now look at the chart. The vertical lines I draw, each line expressing FOMC meeting, and show one of the policies that Fed has been put on the agenda. Red lines for tightening policy, green lines for easing, and yellow lines for not changing on interest rates. Good. Our mindsets are the same and we can understand language of chart ahead. So let's talk about real world examples on chart. We will start exploring charts from early 2018, where big players of financial market started to showing their interest about crypto market and slowly changed the rules of game. An influence of economics principle became more than before. When Fed starts their tightening policy, usually market tends to collapse and have a descending direction in terms of price. Look at the vert lines at 2018 colored in red. Price going lower and lower as interest rate increases. After a while, the higher the rate goes, we can see the power of this trend getting weak. Because high interest rates can have destructive effects on economy and people's life, and there are limitations for using this tool. So when Fed increase interest rates consecutive and inflation heat getting cool, market expect less strict policies from Fed. After a long run bear market in first half of 2019, no FOMC meeting was held, and as a result there was no increase in interest rates, so you can see price has grown about 4 times. Not changing rates after several increasing can be assumed as the first signs of Fed expectations for inflationary are met, and this is the reason that market get optimism. But we should look for more important and reliable sign for this decision making. And look at these green vert lines. FOMC meetings held in these times and they decide to lower interest rates. Usually, this should be a good sign for market, but on 30 January of 2020, World Health Organization declared public health emergency for COVID-19 outbreak. Governments established massive lockdown and strict rules for pandemic, and people's life, income, and jobs was exposed to danger. In such conditions, individuals start to cash out from financial markets like stock and crypto in wide scales, and we see collapse in price. FOMC delivered 2 huge rate cuts in response of this emergency condition in order to stimulate economic and also avoid more crashing in markets. Also issued a stimulus check for individuals to support their expenses during pandemic. Establishing these policies from Fed resulted money printing over $3 trillion just in 2020. History is enough, and let's talk about current market situation. Early 2020, nearly zero interest rates, several FOMC meetings with outcome of not changing rates and keeping it low, and huge money printing policy. This kind of situations gives Bitcoin the best circumstances to grow huge, and Bitcoin price multiplied over 20 times in this period. In bottom line, these policies also caused huge growth in inflation to highest rate in the last 40 years of United States. Bullish trend got weak, and people who was aware of this sold their holdings. Inflation gets higher as you see in chart. So FOMC held meeting on days that marked with red lines, with result of huge rates increases after 2 years to slow down overheated economic growth, and now rates of interest stands on the highest level in last 15 years. In the last FOMC meeting was held in couple days ago, Mr. Powell said clear that they will continue a strict policy till inflation rates get lower than 2%. Fabulous. Let's talk about how to use these informations to take profit. We should monitor 2 parameters in the coming months: inflation rate and interest rates. These 2 can wildly affect future price of Bitcoin, and as long as inflation rate is high, we cannot expect Federal Reserve to take easing policy. The only thing we should do is wait for next FOMC meetings. Their next move determines the future prices, and by the outcome of FOMC meetings, we have 3 possible scenarios to happen. Number 1. Tightening. The most probable scenario as I record in this video. If they increase rates again, it's not a good sign, and market probably can see even lower prices. For holders, nothing to do is the best option, and for traders, they can look for short opportunity. But keep in mind that trading with such indexes is not a task everyone can do. Scenario number 2. They decide to not change in rates. If they don't change interest rates, actually it's kinda neutral to market if you use it alone. But if you consider other factors like several last policies or even current number of rates, it can give you useful signals. For example, in early of 2020, interest rate was at lowest and Fed decided to not change interest rate. Also, last several policies they took before was easing. So we can assume this as a continuous trend bullish in this case. But now last several policies was tightening, and current inflation rate and interest rate are too huge, so we can assume this situation as kind of bearish market. Third and the last possible scenario, which is the most unlikely for now, but for future users, every time they decide to lower interest rate, it means that they met expectations for inflationary or found that they need less strict policy to control inflation. So we can assume this as a good sign, and it's time to analyze other factors and get into the market. An extra bonus tip for you that watched the video till end. You cannot buy in or open long positions solely on the news of easing policy. Look at 2019, they decided to decrease interest rate, but market continued collapsing, although Fed decided to get easy on tightening policies. This is SPX chart from 2000. Market makers always tend to open long positions when interest rates gets as low as possible. So we may not expect that legendary bull market until they take several easing policy and interest rates reach the lowest possible value. Don't forget to click like button, and if you're new to this channel, hit subscribe button. Until the next video, bye bye.